So we'll go ahead and begin our presentation, and we'll go through some housekeeping items before we actually start the process. So just give us a few seconds and we can all move on. Okay. Rachel?
Next slide.
Yes, please, slide 2.
Sorry.
All right. One of the housekeeping items for the CPE and HRCI credits, we are using tracking those things with a conference.io. We'll be utilizing conference.io for the CPE and HRCE credit tracking. To receive your CPE and HRCI credit, you must check in and check out with your company. The system communicates directly to our LMS and for CPE and HRCI, and this is required. Input of all codes throughout the conference.io to make sure that you enter all those codes. There will be 3 codes during the presentation that all 3 needs to be entered in. And in the next slide, we'll go over in terms of the process, how do you open up the conference.co and how do you open the those codes. Okay, Rachel? All right, so first of all, you need to navigate to HTTPS in the URL if you're using your computer, okay? Or you can go into your cell phone if you have the cell phone capability, and you can just use your camera app to scan the code. So either process would work, either through the computer or through the mobile device. For the mobile device, as I said, just open the camera app and scan the QR code on the screen and enter your information to check into the session. And if you're using your computer, please type in the link in the orange text into a new window. Click the session titled Mastering Year-End Payroll, Navigating 2023 and Beyond, and check into the session at that point. Okay. All right. So here's your code 1 of the 3 ones today, code 598. We will leave this code for a few seconds, so to make sure that you guys can all enter the code either via the mobile or through the computer. So while you guys are attempting to do that, just a few other housekeeping items. Okay, the code is 598. If anybody can't read it, at least maybe you can hear it. And if you have any questions about the conference.io or questions related to webinar material, please submit your questions via the question feature on the control panel. Okay, everybody is muted, so that's the only way the questions will come through, and we'll answer the question through the question mode. Number 2, if your question cannot be addressed, the team will follow up with you after the webinar. Presentation slides and our year-end payroll checklist can be downloaded from the handout session of the webinar control panel. So you should be in the handouts. There's 2 handouts. One is the slides itself for the presentation, and the second was the year-end checklist, which will go through towards the end of this presentation. So those are readily available for you to download those 2 documents. And obviously, this webinar is being recorded and will be available to you post this presentation to all the audience that we have today on the presentation. It'll all be made available. Okay. If at the conclusion of the webinar, a short survey will be launched, which you will need to complete for professional credit certificates, and that will be mailed to you in 1 or 2 weeks after the program. So basically, you need to make sure that you answer the short survey, and then in 1 or 2 weeks you will receive your certificate for the CPE or HRCI credits. Okay. So those are the housekeeping items, and I'm hoping that everybody has been able to log into the conference.io and or use the the camera app on your phone and able to log in to get your first code, go in there as a 598. Okay, so having said that, let's move on and have some fun. Okay, all right. So a short introduction of myself. I'm Neil Verma with Sikich, and I'm the Managing Director for HR and Payroll Advisory and Consulting Group. Rachel?
Similarly, I'm Rachel Saunders, also Managing Director with the HCM and Payroll Advisory Consulting Team.
Okay, let's move on to the agenda.
Oh, do we want to mention this?
No, it's okay. It's okay. Just all right. So a short disclaimer, guys. Can you go back to the disclaimer, Rachel? Okay. Obviously, we have tried our best to make sure that we capture all the information and the data that's required for the topics that we're going to talk about. But that may not be the final things because, as you know, the DOLs and the IRS keep issuing these changes throughout until the year end and even beyond that. So this is not supposed to be any legal or tax expertise or advice to you guys. So if there's anything that you see there, that make sure you validate that through your resources and to make sure that you have the latest information available. Okay, so it's kind of a short disclaimer that this is not a legal or a tax advice in any way or shape from a Sikich. As far as Sikich is concerned, Sikich is, we are in the business, multiple businesses, as you can see, tax compliance, IT, CRM services, but the main one that we are part of, Rachel and I, we're part of the human capital management and payroll division itself, which basically does a couple of things. Number one, we assist our clients in the new implementations of the new systems and technology, number one. Number two, we also do manage assessments that if a client of ours requires to do certain assessment of the process or technologies and to recommend some changes that they can make to streamline the processes, we do that. We also provide what we call as a intermittent payroll management services to our clients also. So that's what human capital management and payroll division is made of. Okay. All right, so here's the beginning. So here's the things that we're going to cover today. We're going to cover about proposed overtime rules and changes. Now, it says proposed for the first and the second thing that we're going to cover, that these are not, let me repeat that, these are not final regulations that the DOL or IRS has issued in terms of the overtime independent contractor rules. Okay, so these are proposed right now, and they're supposed to be going effective sometime either late this year or early next year. That's why it says proposed. We will also cover about 2023 federal payroll related updates. We'll cover state leave programs. We will also cover the year-end checklist. So the year-end checklist that you're going to see in the presentation is a little bit different. It's the consolidated version, whereas the version that you can download is comprehensive, and you can really utilize that during your year-end process for all the things matter to you. Okay. Then Rachel will also pick up at the end the changes in the minimum wage at the federal, state, and local level. We'll also cover the 2024 unemployment wage updates. Now, if you look at the bullet point for state leave programs, we'll tell you what the state leave programs are, but at the end, in the paid leave policies, we're actually providing you a high level what that state leave policy is, if it is existing in that state. Okay, so you will have all that for your reference also. Okay, go ahead, Richard. Okay, so our first of the topic, what is the proposed overtime rule? So there's only really one change, but that one change is really gets complicated if you really think about it. Okay, they're not changing the hours after 40. You still get the overtime, and those rules and regulations don't change. The only change what they're doing is that they're changing the exempt salary, if you want to call it, right? That if somebody makes $35,500, they could be considered as an exempt employee. Now what they're doing is they're changing that limit from $35,500 to $55,068 per year. Okay, so under the proposed rule issued by the Labor Department, the cutoff for receiving overtime pay after 40 hours a week will rise to $55,068. Okay, so under the law, employers do not need to pay overtime to workers who make above the salary cutoff if they're bona fide executives or managers, or meaning the primary job is management, right? So you can still have a non-exempt employee making more than $55,000, but if they're in a managerial role and they qualify to be a manager, then obviously you don't have to pay overtime. Now, there's a lot of consequences to changing this, from going from 35,000 to $55,000 salary. Okay, so it could lead to many employers to convert some salaried workers to hourly workers. Keep in mind that could happen. That if they're truly not a bona fide manager, or that they're currently slated as exempt, they would need to change that to non-exempt person. Okay, or I like the other way. Hey, raise my salary to $55,000, right? Now they can certainly do that, but would that happen? We don't know that. So there's a lot of ifs and questions how the employers would react and would like to manage that. Okay, Rachel, next slide, please. Okay, so what this means, okay, so overtime eligibility could also discourage employers from promoting workers to junior management positions. Okay? Very simple, you guys. I mean, whether the employers have used it to their advantage or what is a bona fide exempt person, now it's truly moving it to $55,000. It says, am I going to move this person to a management role when I have to pay that kind of a salary? I was paying $35,000 and I could afford to do that. But now I have to pay $55,000 for them to be a bona fide manager. Can I certainly do that? Would that prohibit the employers from moving people to the management roles, right? The overtime limit would automatically adjust every 3 years to keep pace with the rising earnings, right? So that's another one that's, it hasn't had happened in the past, right? But going forward, what they are going to do is to adjust that wage limit with the cost of living increase every 3 years. So 3 years from now, that $55,000 could be anything, depending upon the cost of living, okay? Raising this threshold will make the practice less common by eliminating the subjectivity in determining which workers should receive overtime pay. Instead, like assistant manager in restaurants would become eligible for overtime automatically, no matter how the job responsibilities are, right? Okay, so it's kind of, a brand new rule that's coming up either at the end of this year or sometime next year. So it has a lot of open-ended questions which have not been answered today. But as we go along, we'll keep an eye on the Department of Labor and the federal changes that they come through, and we'll provide any information that as it changes. But certainly, it's an area to watch out for the payroll folks, because it is going to change either people's salaries, people's job codes, okay, and all those things could become cumbersome to manage at the end of the day, okay? So the last bullet point, one of the key benefits would be to prevent employers from misclassifying workers. I'm not sure if that happens today, or if it does happen. Now you truly have to think about whether I'm going to put this person as exempt or non-exempt, because exempt employee must make $55,000 a year, right? So the employer will have to think twice or more than twice as to how the person should be classified at the end of the day. And don't misclassify the person just because you don't want to pay overtime. Okay, so a lot of things are coming up on this one as we move forward. So we'll keep an eye yourself too, guys. I'm sure you guys have the tools and approach to see how you can manage that. But certainly this has become a very hot topic. Okay, yeah. Similar to the overtime, the exempt and non-exempt, there's also a proposal for the independent contractors, how we classify the person to be an independent contractor versus employee, right? So currently today, as you know, that we talk about, hey, person is an independent contractor if they work on their own, they make their own time, they have their own computer, and all those things, which is very simple and easy sometimes to decipher who qualify as an independent contractor versus an employee. Okay, now there's a proposal out there that goes very beyond those original things that they have considered to classify the person as an independent contractor or an employee. So we have listed those 6 conditions, okay? And I'll go over some of those to kind of explain what they mean. So there's basically 6 different criterias now the Department of Labor is looking at to say, hey, you have to meet all these criterias and analyze those in order for you to qualify somebody as an independent contractor, okay? So think about the first one, opportunity for profit or loss depending upon managerial skills, okay? What does that mean? So basically, what that is saying is that if a worker can set or negotiate his pay, accept a declined job, choose the order in time to performance, engage in marketing to expand the business, and hire other purchase materials or otherwise invest in the business, the worker is more likely to be an independent contractor, okay? Which makes sense, okay? But however, deciding to do work or accepting more job is not the indicative of a contractor status. In other words, it actually comes up in the 3F factor 3 and 4 also, is that just because you're taking more jobs or more work doesn't mean that you're a contractor. You could still be an employee. So it's one of those vague areas where it's kind of very broadly written statement that says, hey, opportunity for profit or loss depending upon managerial skill, right? The second factor is investment by the worker or the employer, okay? So investments that are capital or entrepreneurial in nature, such as those increasing the worker's ability to do different types of work, reducing cost, extending market research, indicative of contractor status, right? However, investing in tools to do the job doesn't really say that you're a contract. It could be an employee. So again, it's a vague ruling that we have today, and it's a lot being talked about in terms of what the final outcome will be of these things, okay? And then it comes from a factor number 3, degree of performance in the work relationship, right? When the working relationship is indefinite or continuous, that means it's an employee, right? It indicates the employee status. But if you're working on a project base that's limited of time and limited of the work that you're doing, that says you're a contractor. That's so, you know, we look at it today. But at the same time, a project-based or a so assume that you're in a company that does work on like ourselves, right? We work on a project base. Does that mean I'm an independent consultant? No, I'm an employee of Sikich, okay? Even though I work on a project base and I work on a continuous long-term relationship. Look at the construction companies, right? You go into a construction company as an employee, you work on a project A, you move on to project B, project C. Even though it is project related, but that's still an employee. So there's some ambiguity in these things as to how these things will be looked upon, right? Okay. And then you go into the nature and degree of control. You know, who has what control? We talked about, you know, the contractors have control in terms of how they do the job, where do they do the job, how do they time. So that is, again, another indication of how we classify a contractor versus independent employees, okay? Extent to which the work performed is an integral part of the employer's business. Or the last one, you know, skills and initiatives, okay? Now, employees can have skills and initiatives. Contractors can have skills and initiatives, right? Nobody says that neither one of them can or can't have that. But at the same time, if you need a specific initiative or a specific skill to do a job, that could qualify you as a contractor, okay? So Department of Labor is looking at it very, you know, openly right now as to what they need to do to make sure that the employers are treating the employees and not getting the contractor, whereas the contractor should have an employee status, okay? On the bottom of it, I have also given you a URL, which has a lot more information that you can utilize in terms of determining where this law is going, where this regulation is going, okay? So what does it mean for employers, right? Rachel, can I have the next slide, please? Okay. So what impact does the regulations have, right? It is very likely that industry groups will seek to invalidate the regulations. So there's a lot of lobbying going on today uh, that it is going to make this initiative of law is going to make it cumbersome for employers to manage. Okay, there's too many rules and regulations behind it, and still we don't have the final one. So there's a lot of lobbying going on. So we don't know which way it is going to end up, or where it is going to stop, or the final version is going to be. Okay. So if adopted, it'll make it harder for companies to establish at the audit stage that individuals are independent contractor, right? You can't bring the employee or a contractor on board and then do the analysis, right? Oh, you're a contractor versus an employee. You have to do that before you bring the person on board, okay? So it will make it harder for if I need a contractor tomorrow, then I have to get past all those 6 hurdles that I have. Okay, it might delay the hiring of a contractor, or it might delay the hiring of the employee. It depends. So it is, from a process perspective, it is going to be a little bit harder for employers to manage that. Okay. Again, a little bit of a warning here. DOL will seek to initiate investigations of companies that engage large groups of independent contractors. Now, but that doesn't mean that if only you hire one contractor, doesn't mean that the DOL is not going to come knock at your door. Okay, but the companies who have habit of employing large number of contractors obviously are going to be the first in line to be audited by the DOL. Okay. At the same time, now how the courts will view it, we don't know that yet, right? The courts may look at it. There's no impact on how they treat these kind of legal issues that they have. Whether the individual is employee or independent contractor, that's truly not defined. That if somebody has a grievance that I'm an employee versus a contractor, at this point that has not been defined how the courts would look at it. Okay, so that's the second proposed law that is coming either the end of this year or maybe next year. We don't know that yet, but it is under the conversations that they're going on today within the DOL to make sure that they have the final version. Okay, date is not determined yet, but these two things are coming. Okay.
I would just add, for good measure, one more reminder that those two pieces are proposed, and so as Neil mentioned, we'll need to watch for how those things turn out, and know that that is not finalized yet.
All right, so let's leave those proposed things out of the way for now. Let's move on to something that's definitely happening next year, right? The federal payroll related updates. Okay. One of the change that has been proposed, recommended, and already been put into place, that the organizations who filing 10 or more IRS returns of any kinds in aggregate will need to be filed almost all required returns electronically. Okay? The key word is 10 or more IRS returns, right? So what does that mean? So we're giving you a couple of examples, okay? So think about company W is required to file 5 forms 1099 INT, 5 forms 1099 DIV for a total of 10 returns. Because company W is required to file 10 returns, company W must file all the 2023 returns 1099 INT and 1099 DEV electronically. Okay. Now, it's the 1099 in INT, they're looking at individual forms. They're not looking at one consolidated filing. So if you're filing more than 10 forms, you're doing it electronically. Okay. Or you look at the example 2. If corporation S, an electing small business corporation, is required to file one 2022 form 1120S, 2 forms W2, 2 forms 1099 DEV, or 1 form 940, annual federal unemployment tax return, annual 4 941 tax returns. So if you add all those up, it comes to more than 10 returns. Okay. So you no longer can do this by paper. You have to do this electronically. Now, The companies who are outsourcing their payroll today, most of the third-party vendors are already doing that electronic. They don't want to hold any paper. But if you're doing it internally yourself, guys, make sure that you monitor that, how many aggregate returns you have. And even if you don't have aggregate return, can you do this electronically, make your life easier? I'm sure that you can. So please make sure that you follow the IRS guidelines for the 2023 filings, and you do all your filings if you fall under the 10, over the 10 aggregate returns. Okay, Rachel, can I have the next slide, please?
Oop.
Yeah. All right. Okay. I thought I had
Are you
another
ready for
slide.
the map?
Okay. Can you go back? Wasn't there another slide? No, okay, anyway, okay. So guys, just be careful as to how you manage your electronic filing. Like I said, if you can, even if you don't have term returns, if you can do the filings by electronically, go ahead and do it. There's no harm in that. It'll make your life easier. And they have, IRS has all the tools to do that. So please do that. So that's on the federal side. Now let's get into the state side from a family leave program perspective. Okay, Rachel, can I see the map? Okay. So here's your US map. Okay. So the dark blue states, those states do not have any formal leave policy, which is majority of them. Okay. But that doesn't mean that the employer cannot have their own leave policies, right? But the state itself doesn't dictate anything from a leave perspective, paid, unpaid, how much to provide, what to provide, for what sickness. So those states don't have any policies, whereas the states that are in orange currently have a formal policies, okay? Now, going forward in 2024, there's about 5 states joining that, the mandatory states, so Colorado, Delaware, Illinois, Maine, Maryland, Oregon, okay? That they will have their own state written policies for the leave, okay? So make sure that you work with your benefits group or the leave administration group, that those are, if you need to do any configurations from an operations perspective or for payouts perspective or the payments perspective, that you understand those policies, okay? Now, one of the policies, the state that I'm going to focus on is California for a second. Can we go to California for a second? Okay. All right. So California always had, we'll say always, I mean not forever, but they always had, as far as I remember, some written policy in the shape or form for the leaves, right? As of last week, they have actually passed a law for another leave policy, okay? And what is that called? So that is called reproductive loss, okay? And that bill was passed on 10/11, and it goes live on January 1. So what is a reproductive loss policy? The reproductive loss policy is basically if you had a miscarriage, you have a failed adoption, or for any reason you lost your pregnancy, okay? State is providing a policy that says you have 5 days of leave that the employer needs to provide if you have more than 5 employees in the company. In the event there's multiple reproduction losses in any given 12 months, that could go up to the maximum of 20 days. Okay, so that's a brand new policy just recently signed beyond the other policies that they have. Okay, so keep a watch out for that one. It is already passed. If you guys can read on it, you certainly do that. But if you guys need that policy, we can certainly send it to you, send us a request, and we can certainly accommodate that, okay? So let's go into one of the states, Colorado, okay? That's a new one, it's just coming up, right? Can we go to Colorado, Rachel, for a second?
Yes.
On the gray side.
Got it.
Yeah, okay. So this Colorado, employees will receive up to 12 weeks leave in 1-year period to bond with a new child, adoption, birth, foster care, or family member with a serious health condition or with their own serious illness health condition, or make arrangements for a family member military deployment, okay? Very it covers a lot of those areas. And payroll withholding and employer contributions began on 1/1/23. Employee benefits will begin on 1/1/24. Okay, so we have given you the synopsis of what this policy does, but at the same time, we are also giving you the URL for Colorado, colorado.gov, that you can go there and take a look at the complete detailed policy as to what it means and how does it impact your employees at your organization. Okay, let's do one more, Illinois. Okay, so Illinois is a brand new one also. Beginning January 1, 2024, all Illinois employee, including domestic workers, will be entitled to earn and use at least 40 hours of paid leave in a 12-month period. Employers may offer more than that required amount. Okay, so again, it's a brand new policy. The payroll contributions and withholdings employer go into effect 1/1/24, and the employee benefits begin on 3/1/2024. Okay. Again, it has the fine prints to it. Employees may begin using paid leave starting March 31, 24, or 90 days after their employment begin, whichever is later. So there is a condition there. Okay. Applies to all Illinois employees except for Illinois school and park districts. So if you work for a school district, you don't need to worry about it. Okay. But for all the commercial organizations, yes, it is a brand new policy that's going into effect, okay? Starting March 1, 2024 for the employees and January 1, 2024 for the employers, okay? Now, I'm not going to go through each and every state at this point because we only have 27 minutes to go in this presentation. But when you get this presentation or you download these handouts, we have given you all the states that have mandatory and the new states that they're joining this written policy. So you have all the synopses, very high level policies as to what those means and how they cover and what they cover. Okay. All right. So here's your code 2 of 3, guys. Okay. 162. Leave the screen here for 10 seconds. So again, if you're using your computer, you need to go to HTTPS. You probably already have that opened. So you can go in there. And if you're using the cell phone, you can scan that QR code and put the code 162 in there. Okay. All right, Rachel.
Okay.
So Rachel is going to take over this year-end checklist, which she'll go through basically the things that you need to consider, monitor, and to make sure to have that successful year-end, what you need to do, tools, and all those things. But remember, this format on the presentation looks a lot different than what you have consolidated list in the handouts. Please use that to the extent that you can. We have tried to cover every task that may come up in the year-end process. So Rachel, please.
Sure. So my recommendation is to always take these checklist items and fine tune them as best you can for your company and your environment, and add notes. So each year as you go through them, add notes about what team handled it or who the go-to person or contact was, so that you can keep building that resource year after year and improving your reference. So there are a number of these things that I'll use this audit word all throughout. And the reminder there is that if you are running these audit controls sort of throughout the year, your tax reconciliations on the quarter, well, add a monthly, add a per pay cycle. The more you can fine tune those pieces, the lower the volume you'll find at the end of the year, right? Because you're combing through them and fleshing out any issues before it gets to year end. Okay, so so this first section talks about data integrity, right? Verifying the compensation plan, the employee amounts, deferred compensation plan, the employee amounts, again, audit that early, make sure the numbers look valid and that they're changing as you expect them to, right? So when people max out, et cetera, that you're seeing those things update regularly. Similarly, GTL. I always will take a look at this every year because this is an age-graded chart and it's updated often and it ties to other data that essentially means that it's a moving picture year after year. So I always double check the testing on that, even if the plan hasn't changed, just because some of the other pieces that make up the algorithm might have changed. Validate the reasonableness of that data, balance it, maybe pick a few that you're validating on a closer basis, you're looking a little closer at. Maybe an executive, a mid-level, an hourly, or try to pick a selection and take a look at it and make sure it looks reasonable. So then double check that you have a list of any data sourced from third-party vendors or other teams. Make sure that you are giving that data and that those teams know when you need the data and what format and what all you need included in order to post that to the pay record. So if it's third-party sick pay coming from an outsourced vendor, you want to make sure that you stay in communication with them throughout this year-end process, and you'll know when to expect the file and exactly what data should be on it, right? Are all the fields included, et cetera? Will that be, you know, an FTP, or will it be emailed with a password, whatever your source is. Verify the unemployment rates and wage limits, which we're talking about here today. Similarly, the and we'll have the chart for that, as Neil discussed. And similarly, the minimum wage amounts, local, state, and federal. Make sure that all of those things are updated. Unrecorded Social Security Medicare. So this largely applies to retirees and former employees, but it can also be a number of different types of imputed income, which is listed in the next section of the chart. So again, similar to the third-party items, the sick pay, tips, fringe benefits, I would include this in that category. Make sure that you understand every piece of data that affects your employees year to date, that you understand where it's coming from and the source, and that you stay in communication with that source throughout the year and the year begin process. Let's see, Medicare. So this is an important one after the last payroll, right? You want to validate. Again, I would take a cross section of a handful of individuals. In particular, I like to keep an eye out for that additional med if you have any employees that might potentially kick in for. It can sneak past you that wage limit for the additional Medicare. Okay, let's see. Okay, I was going to mention very quickly on the state disability insurance rates and wage limits. That is easy to use the chart and do a VLOOKUP if you want to do it that way to compare for employees, because that way you can integrate the state or locality and include all of that so that you have one row of data where you've aggregated individual employee amounts. Okay.
Rachel,
Yes?
give me 1 second. I feel like a poll question is coming up. Okay. I know. So guys, take a couple of seconds and like to get some poll and your opinions as to where your organization is today from a maturity level of your payroll operations, okay? Immature means that your processes are manual, there are a lot of errors, lack of harmonization. Reactive meaning focused of maintaining, that's all you reactive is that, hey, we have an error, how do we fix it? And let's move on to the next, right? Or controlled, whereas you're focused on improving execution and excellence, or strategic, influences other functions, delivers value. So where do you think your payroll organization is today? So please take a couple of seconds and respond to this poll question. Really appreciate that. So give 10 to 12 seconds.
Okay.
Wow, amazing. So 80% of the people who have responses are with controls, focus on improving execution and excellence. That's a great, great, great news, guys. Okay. Reactive is, I'm yet to see a payroll department that's not reactive. But this is a great, great, great. 80% is a lot better than a 20 or 30%. Thank you very much for that response. Okay, all right, Rachel.
Okay, ready?
Go ahead, Rachel.
Okay, so in regards to this GTL reporting, this is a very, very common issue we see come up often, where at some point throughout the year or after year end, after W-2s are issued, that an employer realizes there's a problem with this reporting. Many employers don't even realize that it needs to be tracked and recorded. So double check this. Just give it a reasonableness check. Watch it. When you have some employees that hit, a catch-up contribution, things like that, or a retirement age, just be watching for these to change, because there are a number of factors in the formulas. You just want to make sure that when things change, that you don't want to impact the formula, that they're not. It's very common, and a lot of times it's too late when an employer realizes it's an issue. So I would get in the habit of checking that one again, audit regularly. Okay, and reconcile as far as the W-3 goes, again with the audit, right? This is an item you should be keeping your eye on throughout the year, not just at year end, year begin. You should be cleaning this up along the way and just double checking it so that you don't have a huge compilation of issues to work through at the very final hour. Let's see. A more imputed income is this personal use of a company car or a company jet. Those types of things, especially when they apply to only, say, a handful of executives, it's very easy to forget about them. So build your list, build it year over year, make it stronger and more ironclad so that you don't have surprises. Okay. Let's see. This null and qualified moving expenses. I would think scrutinize this in terms of how it applies to your company. Is it only US, or do you have a firm that is working with things like relocation and hypo tax for multinational employees, to make sure that you're staying in contact with them and you have all of the data that you need in time to get it recorded and reconcile and balance and audit, okay? Let's see. Contributions for 401k, 401k, childcare, FSA, HSA, validate that those stop at the right times, reasonableness check again throughout the year. Not things that you should be looking at only at year end, right? Almost nothing you see in this year end audit should be a surprise. Most of it should already be dealt with in advance of this year-end process, which I would typically say you need to really be focusing on by November. Wouldn't you say, Neil?
Yep, absolutely, yes.
Okay. And let me check our time. Okay, so again, similar to imputed income and other source data, if you have bonuses, commissions, raffles, drawings, sales contest winners, there are so many things. Am I omitting some good examples? There's so many examples of imputed income, and a lot of times they aren't captured until it's too late or not at all. So someone realizes the day after W-2s go out that, oh, we forgot we did that, all those door prizes at the Christmas party, and we forgot to record those. Or this sales department, one small sales department had a competition and someone won a $5,000, flat screen or, movie projection system, and it didn't get recorded. It happens and it's costly to clean it up. So it's worth a lot to make a strong list, update it throughout the year. If all of a sudden your company comes along and says, look, we're going to add this program because we think it's a great idea, and in 30 days it's implemented, go to your checklist and add it there so you don't forget when it rolls around. More reminders on the imputed income. Let's see. Backup withholding situations, if you have any of those. If you have other unusual circumstances like disbursements, if you have deceased employees or items processed after that point, validate that the taxes happened accurately based on the details. My personal preference when that happens is to push out the wage sooner than later, put a bow on it and call it done, rather than wait until you're in the middle of a bigger issue. When those things happen, I like to clean them up, tidy it up, and close it in short order. It's one less thing also for the employee's family to deal with.
Thanks, Rachel. Hey, can we get another poll question in here for a second?
Sure.
There you go. All right, so guys, second time we're going to ask for your help. So what are your plans for 2024-25 payroll vendors or technologies? Are you just staying in the status quo, mean that there's no changes coming through? Or you need to upgrade planning for your next upgrade strategy or an outsourcing strategy if you're working on that in 24? Or you already may have done all the upfront work and now you're just beginning to start your transformation for payroll next year. So at what stage is your organization? If you could tell us that, that'll be great, helpful, and thank you. Status quo, that's the best status you could ever see, right? 71%, not a bad place to be. Need to upgrade, planning for our next upgrade strategy, 14%, starting our transformation for payroll. So I wish you guys good luck. I'm assuming that you're already chosen as to what your transformation is going to look like. So good luck with that. Thank you very much for that feedback, guys. Thank you.
And we're here for you. If you need any help along the way, you know where to find us. So I would just touch real quickly on this very last item on this page, audit and reset special accumulators. So some systems will do this automatically based on date-driven configurations, but others require a manual reset. And I'm trying to think of examples of each, but just make sure that you're keeping up with the timing on those items so that you get everything in that needs to be in before you do your reset, because it's tricky to roll those back. But if you need to reset accumulators, make sure to add those to your checklist, grow it in that detail year over year. And if you do that, it's going to leave you with a fairly ironclad situation, right? So then all you're doing is adding changes in any given year. And otherwise, you're just going through a checklist, easy breezy, right? It's a lot of data, but it is not excessively difficult, right? Okay, let's see what we have next.
All right. Okay. You know what? We have an extensive checklist out there. So I think in the time frame that we have left, let's kind of wrap up a few things. You know, technology consideration. If you could just go to the next slide, it's very simple. Basically, guys, if you have hosted applications, make sure you have your all year-end releases lined up, do the controls, do the testing. But if you have a vendor-hosted application, then make sure the vendor is applying all those changes that they impact to you, and the things that the changes are being applied. Make sure that you've tested them thoroughly to make sure not only your year-end goes well, but at the same time, your new year also begins with a bang. Okay, so that's all from the technology perspective.
So that you know what to expect, right?
Right. Okay. So let's go on, Rachel.
Okay.
Okay. Minimum wage. I'm not going to go through each and every state. What we're doing here is we're giving you the 2024 minimum wages for each and every state. So please, whichever state that you're in, once you have all the slides, you'll have the new information. But make sure you validate these, because the things are changing constantly now to the end. Some of these are proposed, some of them are finalized. So make sure that you're looking out for the root changes that they're coming through. Okay, minimum wages. Okay, let's move on. Okay. Same thing with the unemployment wage base updates. We've given you state by state the new employer rates and the wage base. We have identified the states. Can you go to the next slide? We have identified the states where the wages are changing on the right-hand side. Okay, so let's make sure that number one, they're final, confirm those. As I said, things are changing. And at the same time, make sure that your systems are updated for January 1 unemployment wages to manage the unemployment wage limits. Okay. But you will have all the details if you've downloaded the presentation. So here's your last and final code for your credits. And I'm hoping that this won't create a confusion like the first one did. So 995, guys, go ahead and put that in there. Okay. Right.
You ready?
Yep. Okay. All right. So this is where the paid leave by state, where I showed you earlier. You have the basic leaves for every state. We have given you the synopsis. Make sure that you can go into the website that we provided to get more details. So there's not much to talk about that from that perspective. That's the last part of the presentation. There's a couple of questions in the chat that come through to me. And one of them was on the 1095 forms, are they considered part of the aggregate 10? Answer is yes. If you're filing any return to IRS, doesn't matter what that is, it'll fall under the 10 returns. Okay, so that's a simple answer for that one. Another question was, does this electronic e-filing start in 2023 or 2024? Answer is, it starts on January 1, 2024. So every filing that needs to be done after January 1, and if you meet those 10 files criteria, you have to file those electronically. Okay. Was there any other questions?
I would just add a quick reminder, and I know we've covered this, I just want to restate it so that it doesn't get overlooked. All of these same categories, the paid time off, disability, minimum wage, those things can all also apply to localities. So make sure not to forget those. Check your locals and make sure that they don't have anything in addition to or alongside the state and federal regulations.
Okay, and there was one more question in terms of the reproductive loss policy. The question was how many numbers of employees, and the number of employees is 5. Okay, if you have 5 or more employees, you will have to get that policy
That doesn't exclude very many, does it?
No, not at all. Okay, and it's for the state of California employers, right? Okay, and if I'm an out-of-state employer, the guidelines truly doesn't give you anything, but I'm assuming if you have employees there that are registered to do business there, then you're a state employer, right? So it shouldn't really matter.
I was trying to remember.
So those are all the questions I got. Okay. So we're actually 1 more minute to go. So if anybody has any questions, and what I like to do is to thank you everyone as to, for taking an hour out of your valuable time, especially for the people who may have a payroll running this week. And today's Thursday.
And the year end.
Either today or tomorrow could be payday, right? And hope your phones are not ringing. That's a bad sign in the payroll department when the phones ring, right? Okay. But anyway, thank you very much. And when you're going to get a little short survey, okay? So for everybody, please fill those up. And if you want the CPE credits and all those, this kind of mandatory to do that. Please fill those in. And I love to hear a feedback as to what other topics. I mean, this is the second year we're doing this. We had a great presence last year. We had a great presence this year. As to going forward, what other topics would you like us to put it in there? And we are thinking of expanding this to not only from a US to a global perspective, especially for our clients who have employees in other countries. We haven't come up with a final decision yet as to whether we have one for US specific and one for other countries, or would we combine those? So we are really thinking about that, but that's definitely one item that we would like to include, number 1. And number 2, when you get your communications from Sikich, a company here, in terms of all the communication, the certificates and everything else, they're also going to send you a couple of links. And for the blogs that I have written on the global payroll. So if your organization is a global payroll, please go ahead and read those. Those actually publish on LinkedIn. Please do that if you're interested, but you will get the links in those emails that'll come to you. Okay. And that's all I've got for the day.
Can I add one more quick note?
Sure.
Just don't forget we're here for you. We'll support you. Don't stress. We'll help you in any way that we can. You know where to find us. Our emails are on the screen and in the deck that you're able to download.
Okay. All right. So it's the survey time, right? Okay. Thank you very much, guys.
Thank you.